Hey guys, Felipe here. Hope everyone's doing awesome. Had a great week and is having a great week. So I come at you today here from beautiful Florida. Can't beat being by the beach, right? It's just awesome. Just has a great feeling to it. Love it. So thank you guys for joining me. I'm gonna kind of go ahead and jump right into it. What I'm going to share with you today. So today I'm basically going to be breaking down Alibaba, which is a Chinese company similar to Amazon in the US. They are a Chinese e-commerce company, an everything store, right? You have a lot of these in different countries, and some are market leaders. Alibaba will be a market leader in the e-commerce market in China. Kind of like El Mercado Libre is the leader in e-commerce in Latin America, right? So these are market leaders for their specific market, right? So I'm gonna kind of swap over here and talk about the Chinese tech market, right? The Chinese tech market has been absolutely hammered over recent time. And we're talking about a big market here, right? The Chinese tech market is a big market. They have a lot of big companies that are competitors to a lot of the American companies, right? They have their own YouTube style companies. Alibaba is an e-commerce company. They have a lot of big innovating technology companies in their economy. It's just been completely hammered over recent time. But then again, I see this as potential opportunity because why buy things overvalued when you can potentially get them for value, right? And there is, of course, risk here because no one knows where this stuff is headed. But considering I've seen some of the companies and what they do and what they produce, it seems that there's potential opportunity here, right? So according to projections, the Chinese economy by 2030 is supposedly going to surpass the US economy in terms of production, but that is a projection, right? Projections are just what they are, but it's something to kind of like look at, right? So here again, this chart basically goes, it's an ETF for the Chinese tech market. Kind of gives you an idea how the sentiments or the stock prices in all these big tech companies from China are doing. And it doesn't seem like they're doing very well right now, according to the stock price, right? So this I find interesting. Baba's revenue in 2014 was 10 billion, their gross profit 8 billion, equity 9 billion, price per share 92 bucks. As of recent time, we're in 2023, revenue is 128 bucks, 128 billion, gross profit 48 billion, equity 156 billion, yet the stock price is selling for 84 bucks. And it's grown much more than in 2014, right? So that just shows you how irrational and not efficient the market is, right? Because this makes no sense. How can a company have grown by that much, more than a tenfold growth, yet they're selling below what they in terms of stock price than at that time, right? That kind of makes no sense. But this might be potential opportunity, right? In arbitrage of the market's sentiment, right? So what is Alibaba? You know, what are they what do they actually do? They are the everything store of China, right? So just to give you an overview of some of their fundamentals. So book value $54.56 per share approximately. The shares are ADS, American Depository Shares, which is the equivalent of eights of Alibaba's Hong Kong Exchange shares equivalent, right? So the ADS, which is American Depository Shares, each represents 8 shares of the Hong Kong Exchange Alibaba. So $54 book value approximately. Not too long ago, it was kind of close to that. You could get something, especially anything in tech near book value. It's pretty crazy. Cash flow of 24 billion, pretty much rounded off $25 billion. And we have a debt to equity ratio of 63%. So everything seems pretty good right there. So basically, Alibaba Group's holding company has 6 major business groups. It has Cloud Intelligence Groups, Taobao and Tmall Group, Local Services Group, Qianyao Smart Logistic, New York Network Limited, and Digital Media and Entertainment Group. So these are basically 6 major business groups that Alibaba's in, right? So basically over the last 24 years, the Alibaba family became quite diverse with increasingly more creative and dynamic units. Our consumer-focused business in China served over 1 billion Chinese consumers last year, and then this is from their financial reports, right? Cloud Intelligence Group is currently the world's 3rd largest and Asia's Pacific largest cloud computing service provider. As of March 31st, 2023, Cloud Intelligence Group has 86 availability zones across 28 regions worldwide, serving more than 4 million global customers, including 80% of China's science and technology innovation enterprises, 60% of China's national level specialized little giant enterprises, and 55% of listed companies on this Chinese stock exchange. This is a massive monster of a company. Again, they are the Chinese Amazon. They are the everything store of China. But here you can kind of see they're in retail, to home, they're in cloud services, media services, entertainment. They're in supermarket services, kind of like Amazon. It owns Whole Foods. So they're in the health industry through Alibaba Health. They're basically they're the everything store, right? So Cloud Intelligence Group will pursue a spin-off from Alibaba Group via stock dividend distribution to our shareholders and become an independently publicly listed company. So if this does occur, basically they're saying they're going to spin off their Cloud Intelligence Group and they're going to give it as a stock dividend distribution to shareholders. What that is that they spin off the company from the parent. In this case, the parent is Alibaba. They spin off into Cloud Intelligence Group, and then as a current holder of Alibaba, those who are shareholders will receive as a stock dividend. So they will receive stock for a Cloud Intelligence Group as a being a shareholder, right? If that occurs, there is no information on when that might happen. They have been trying to spin off a couple of companies, and they have been prevented, or Chinese regulators have made it difficult for them. Qianyao Smart Logistic Network and Fresh Hippo will seek independent public offerings as well. So those companies are in that same potential thought process, right? So Taobao Holding Limited, it's basically Chinese commerce and local consumer services business. Taobao China Holding Limited, certain major subsidiaries related to Chinese commerce and local consumer services business. Alibaba.com Limited, Chinese commerce, international commerce, and cloud businesses. These are all basically different businesses within the umbrella of Alibaba, right? Alibaba.com Investment Holdings Limited, certain major certain major subsidiaries relating to China commerce, international commerce, and cloud business. So they're also competing in the international markets. I think I saw something about uh, they're expanding to like Spain and other countries, something like that. Alibaba.com China Limited operates back office and administrative functions. Alibaba Investment Limited, strategic investment in major subsidiaries relating to digital media and entertainment business. Alibaba Group Services Limited operates as our treasury center in Hong Kong. That's crazy. They're so big, they have a freaking treasury center. Tubao Software Co. So basically holding company and provides software and technology services for Tubao, small technology co. And this basically provides software and technology services for small and Alibaba Technology Co. operates the wholesale marketplace and cross-border commerce, retail, and wholesale business. Alibaba Co. Ltd. mainly involved in strategic operations. So they generated approximately $25 billion in free cash flow during the most recent filing, which they state they use the abundant cash reserves to invest in new technologies, business, and great talents. And they have also announced a share repurchase program. That's great stuff to hear, right? They're investing in new technologies. If a technology company does not increase their technology and advancements, right, they become outdated. And also investing in great talents. Ultimately, what drives a great business is the talent of that business, right? It goes a very long way. It's the people, right? So Alibaba is basically unwavering in its commitment to focus on long-term value creation and the three strategies of consumption: cloud computing, and globalization. Over the last 20 years, we captured two historical opportunities: e-commerce in China's consumer-focused internet and cloud computing in China's industrial internet. Their share repurchase program, which they recently announced, is that they're going to repurchase $40 billion in their shares, right? And no one knows when that's going to happen. That just means they have $40 billion that they can repurchase their own company stock back with. I like this a lot. Their values is great when a business or a company has values, because this basically creates a culture for the workers in the company, right? It creates a culture, and that ultimately goes a very long way in business. So I'm going to read their values out to you. Our values are fundamental to the way we operate and how we recruit, evaluate, and compensate our people. Our 6 values are: customer first, employee second, shareholder third. This reflects our choice of what's important in order to priority. Only by creating sustained customer value can employees grow and shareholders achieve long-term benefit. I super agree with that. Trust makes everything simple. Trust is both the most precious and fragile thing in the world. The story of Alibaba is a story of building and cherishing trust. Complexity begets complexity, and simplicity breeds simplicity. Are straightforward. What you see is what you get. With trust, there is no second guessing or suspicion, and the result is simplicity and efficiency. Change is the only constant. Whether you change or not, the world is changing. Our customers are changing, and the competitive landscape is changing. We must face change with respect and humility. Otherwise, we will fail to see it, fail to respect it, fail to understand it, and fail to catch up with it. Whether you change yourself or create change, both are the best kinds of change. Embracing change is the most unique part of our DNA. That is awesome. Today's best performance is tomorrow's baseline. In Alibaba's most challenging time, this bird has helped us overcome difficulties and survive. In bad times, we know how to motivate ourselves. In good times, we dare to set dream targets. Stretch goals, face the future, or we regress. We must shoot for the moon, challenge ourselves, motivate ourselves, and exceed ourselves. It is not now, when, if not me, who. This was a tagline in our Alibaba's first job advertisement and became our first proverb. It is not a question, but a call to duty. This proverb symbolizes the sense of ownership that each must possess. Live seriously, work happily. Work is now, life is forever. What you do is in your job is up to you, but you have responsibility to the ones who you love. Enjoy as you enjoy life. Treat life seriously as you do work. If you live with a purpose, you will find a reward. You make Alibaba different and make your loved ones proud. Everyone has their own view of work and life. We respect each person's choice. Whether you live by this value depends on how you live your life. So they have a great values, right? And this is what basically they teach all their employees, and the culture behind that, which to me seems pretty cool for a company to do, right? And not all companies do that. And culture is extremely important for any business to try to thrive, right? So here we have basically just kind of giving you a broad overview of what they do, right? And what are their focuses are, what are their values, and so forth, which is really good stuff from what I'm seeing. They also, in terms of their technology and software, they have their own large language model called Ton EQN. So that basically means that potentially a lot of the software they write and create, it's written using this specific programming language that they have created. So that lets you know that they have they're innovators, right? So let's look at some actual numbers here and see what's going on, right? So basically, here's the recent filings, 20 for 2023. Revenue is here we have, and this is RMB, right, which is the Chinese currency. RMB, $868 billion dollars. That's crazy amount, but in the converting it to US dollars, it's $126 billion dollars. That is insane. That is a whole lot of revenue. 126 billion 491 million dollars in revenue. That is a lot of revenue. And here you can see it in millions. So we just add the extra zeros to the end here. Majority of their revenue comes from China's commerce. They seem to be operating at a loss in their international commerce. They're probably still attempting to gain market share or see if that even works out. So they have been operating at a loss in international commerce. Great thing is majority of their revenue comes from China commerce, which is the largest producer, right? You can kind of see here. But it seems that a lot of their other sectors or focuses in businesses are running at a loss, right? You can see international commerce at a loss, local consumer services at a loss, and so forth, right? So it seems that the big boy or the producer that is making the company profitable is the China commerce side of the business, right? So moving forward here, what we have here, so consumer management, I'll skip this one. So yeah, total China commerce You can kind of see here, we have from 2021 up to 2023. And what I've seen is, considering what the stock price is doing, you would assume that their revenue has dropped or that something fundamentally is really wrong. But I guess the fear comes from the regulations that have occurred in China, because they were cracking down on their tech industry, and the issues the founder of Alibaba was having with Chinese politics or whatnot, right? So as I was saying, percentage of revenue. So you can see here, total China commerce, 70% of the company's revenue comes from that side of the business. So from 2021, revenue was 501 billion RMB. 2022 was 591 billion RMB. And then I'm just doing approximations here. And then for the recent filing, it was 582 billion RMB, which is not bad. I mean, a company is still growing, it's increasing in terms of production, right? And then total international commerce has grown as well. So you can see here, total international commerce, 48 billion, and this is basically 7% of the company's revenue comes from this side of the business. So for 2021, 48 billion in revenue. For 2022, 69 billion in revenue. For 2023, no, actually for 2023, 69 billion in revenue, and 2022 was 61 billion in revenue. So it has grown, it's producing more, right? And that equates to 10 billion in revenue in conversion to US dollar. So the total, when combining these two, 717 billion RMB in revenue for 2021, 853 billion in revenue for 2022, and 868 billion in revenue for 2023, which equates to 126 billion dollars, right? That's a lot of money, a lot of revenue this company produces. Cost of revenue has actually declined, which is interesting. So here we see for 2021, basically the cost of revenue and so forth has decreased, which is a good thing, right? This means they're having to spend less money to make more money, right? So 2021 total 50 billion, 2022 total 23 billion, total 2023 30 billion. So that's good stuff to see. Net income and here we have comparison 2021, 2022, 2023. So net income for 2021, 143 billion. For 2022, it was 47 billion, and for 2023, 65 billion. So net income has declined from 2021, but 2021 was an absolute crazy year for anyone and every company and the market. Everything was just like exploding because all the free money and stimulus everywhere in the world, basically, almost. So what company was not doing beyond what they've ever done before in that year, right? Late 2020 and for the most part 2021 was one of the best years in the market ever, right? So net income has declined, but it seems to have been going up from last year, right? So that is super cool to see. Here we have, skipping this, see what we got going on further along. So yeah, net income has dropped, but has increased from the year prior, which is good to see. One thing that has been standing out to me, which the company has announced that they were going to buy a bunch of stock back, right? They have been buying a whole lot of stock back recently. They might be smart about it and taking advantage of the fact that their stock is selling for a lot less at current price. And if they are doing that, they're very smart, because that makes a whole lot of sense. It seems that they have dropped their their treasury investments, which is good because treasury investments are not performing great because interest rates all over the world. I still believe China has kept them low, but for the most part, all over the world, they are increasing. And that means that these kinds of investments are losing value. So it doesn't make much sense to be investing in that right now, if that makes any sense. So here, let's see what we got going on. Skip forward to the balance sheet, right? So here we have the balance sheet, total current assets from compared 2022, 2023. We have $638 billion in total current assets and almost 700 billion for 2023. Total assets are that's a big number. I don't know if that's 1,695 billion RMB. And for 2022, and then for 2023, $1,753 billion, or not dollars, RMB, which equates to $255 billion US dollar. Yeah, that is a lot. It's a big freaking number. So cash and cash equivalents has actually increased from 256 billion to 326 billion RMB, and that equates to 47 billion, rounded up to $48 billion in cash and cash equivalent. This is a monster of a company. You can see from these humongous numbers in their finances, right? So here, what do we have? We have a total current liability, 383 billion for 2022, and then 385 billion for 2023. Not a huge increase there. Basically total liability 613 billion for 2022, and then 630 billion for 2023. So total equity is again a huge number, 1,072 billion for 2022, and then 1,113 billion for 2023, which leads total liabilities equity is 1,695 billion for 2022, 1,753 billion for 2023. Those are some big numbers that I don't even know how to pronounce. So yeah, I like this company in terms of what you get for what you risk, right? I find it super interesting, and considering that projections are that the Chinese economy is supposed to be larger than the US economy by 2030, there's something to look at right there. So I'm gonna leave you guys with a cool market quote. All data and charts are nothing more than mere symbols that represent the collective behavior of human beings. That is awesome to think of it that way, right? Because in reality, that's what data is, right? Some market history, large lumber shortages during the 17th century in England due to growing demand for iron and huge timber requirements for shipbuilding. So that caused wood prices to dramatically increase during that period. Also, railway expansions was the main reason for an unprecedented demand for steel during the second half of the 19th century. So that again would equate to steel prices increasing during that period, which if one knew and could use that to make money off of, right? You can have bought derivatives or futures in those areas and made a ton of money. So with that being said, thank you guys for watching. I really appreciate it. I hope you liked what I shared with you and it may be of value to you. Please like and subscribe if you liked what I shared. I would appreciate that. And thank you guys for your time.